Hello and welcome. You're watching us here on Halftime Report. I'm Manglam Malu. With me, Ekta Batra as well as Sonia Shenoy. Is always looking good for the markets. No problems whatsoever. We started well. A brief resistance upwards of 17,740, but we're holding around that 17,700 mark for the Nifty. The Nifty Bank outperforming just the way it did in yesterday's last hour of trade. The broader markets also no complaints whatsoever. Sonia, Ekta, three stocks advancing for one declining.
Absolutely, and it's turning out to be a really good day, especially for mid caps, right? So as you said, no complaints at all, and so many companies are sitting at fresh 52-week highs. So whether it's Federal Bank, Karur Vysya Bank, largely from the banking space, you have Bank of Baroda, all at fresh 52-week highs, and then many of these capital goods names like ABB India, etc., are also looking pretty good. But let's get straight down to talk about individual stocks. Then TCI Express is the stock on our radar. The company has given a very good outlook post its first quarter numbers. Management said that they are on track to maintain an 18 to 20% revenue growth. Chandar Agarwal, the managing director at TCI Express, joins on the show to talk about that. Chandar, thanks a lot for joining in. I want to start by asking you about the incremental demand that you're seeing, because the last time you did mention to us that you have a growth target of 18 to 20%, and on the margin front you're looking at about 17-18%. But just give us some qualitative analysis on how demand is shaping up and what will lead to that 18 to 20% growth.
Right. So thank you for having me. And, the interesting thing is that all our verticals have started showing good traction. And that saying, we're in the auto components, we are in the textiles and the engineering, and pretty much all the high value products which are manufactured in India, we're seeing a good traction happening. So I think the demand is quite strong, and that would be the face for higher volume growth as well as a revenue growth, and in turn profitability.
Okay. Mr. Agarwal, you have around 104 crores of cash on books. I'm more interested in terms of knowing what the plans would be possibly to deploy it in FY23.
So we're right on track to start our second automation project. And we recently purchased the land in Chennai and Calcutta. So the construction of this would entail a part of the capex plans that we have, as well as the automation part. So I think in general we would end up spending about not maybe 100 crore, but almost 80 crores, up to 80 crores is what I foresee. And we also have we know that we have a strong fundamental business and we have a strong outlook for the future as well. So we are possibly the only logistics company in India that is doing a buyback. So that is in progress, and that is happening. So I see that also being one of the good success factors coming in.
I see you adding a lot of branches as well. You've added 10 new branches in the first quarter. You're targeting 15 new branches for business, in this entire year. What I wanted to know is your utilization. The first quarter was close to around 85% odd. Where does it stand right now? And secondly, all the other value-added businesses that you've started, be it cold chain, e-commerce, rail express, you were targeting that to be about 25% of your revenues. Where do they stand at right now?
It's about almost 12 to 15%. And the new verticals are showing good traction. I do not see any sort of problem emerging in terms of the volume that's coming up. The acceptability is very high because again it's a very niche product. It's not like run of the mill where we have 100 competitors and all of that. So I think this is as we have planned. It'll continue to be in the same manner. I do not see any deviation from that.
You said that you have, auto clients as well, and you're seeing good growth over there. You have clients like Hero, Maruti, etc. in your books. What is the kind of opportunity in the auto space? Just trying to understand how much does it feature as a part of your overall revenue stream, and how much can it grow to?
So we usually what we move are the auto components. So regardless of how many cars sell or don't sell, we are part of the supply chain which is behind the auto manufacturing. And that is about almost not more than, I would say about 8 to 9% of the business. So we're not highly leveraged, and hence we've been able to have good growth even when the auto had slowed down. So that clearly shows that, it's a right vertical to be in, and we continue to service our clients over there.
You didn't tell us about the utilization that you were at.
Oh, yeah.
Yeah.
So that is about almost, I would imagine that at this point it would be at 87%, a little higher. And of course, because the volumes have also grown. And by this quarter end, it could be a little bit more than 86, about 87%.
Okay. So utilization levels have risen. You did around 84.5% in the previous quarter. You're saying that you're at around 87% at this point in time. Just wanted to understand, even when it comes to new businesses, share of new businesses, it currently, it stands at around 15%. How much do you expect it to rise? Which are the sunrise sectors for you?
So, what has really taken off well is the customer-to-customer business and the rail express business. These businesses have not been they've not been offered by other logistics companies, and we managed to create a new space altogether. And I think in the next 5 years, these businesses would definitely be about 25% of the overall top line.
Okay, 25% of the overall top line. And any kind of fresh capex that you plan to put on board for any further investments? What is the capex plan for the full year?
As it was mentioned, it was about 100 crores and about 100 crores for the buyback. So I think I do not see more than 85 crores happening this year.
All right. Final question then from my end. Chandar, 18 to 20% is what you had guided for, with 17% margins in the second quarter at least. Do you think you can do better than that? That's point number one. And secondly, the 2,000 crore revenue target that you have for FY25 with 20% margins, do you think that may come sooner than anticipated?
So we are always, looking at okay. So as the management, I do not like to get top line at the cost of bottom line. I don't want to have a 35%, 40% growth and lose money on doing that business, which is typical of logistics companies in India, especially in India, because how the environment is very challenging. It's cost plus, and it can never be profit plus. So in that sense, I think I'd like to maintain top line growth to what we have committed. And as the economy improves, there is a very high possibility that we could also go up to, as per our plans of achieving 30% to 32% growth.
Okay, all right, Mr. Agarwal, we're going to leave it on that note. Thanks very much for joining in and speaking with us. We need to take a short break, but up next, we'll be speaking to the Director Research at Incred Capital to discuss Lupin and what the way forward would be now that they've seen a delay in one of their key drugs.
You look lovely.
Eyes on the road, mister.
Don't worry. Asta will make sure I don't cross the line.
MG Asta, the AI affair.
सर आपका कार इंश्योरेंस रिन्यू
तो सेम कंपनी से करा लो ना।
चिंटू, तेरी पैसे उड़ाने की आदत गई नहीं अब तक।
मम्मा,
policybazaar.com पे 20 से ज्यादा कंपनीज के कार इंश्योरेंस कंपेयर करके खरीदो और पैसे बचाओ। सिंपल।
Some folks dream of easy access to airport services. Some have ease of a card. Be it lounge access, meet and assist, spa services, and more. And what powers their credit and debit card is Dream Folks, India's largest airport services aggregator platform. Dream Folks.
इडली देवड़ा प्लेन उत्तपा मसाला उत्तपा ओनियन उत्तपा टमाटो उत्तपा सारा सारा चीज डोसा मसाला डोसा पेपर सादा डोसा वेज कढ़ी वेज कढ़ाई वेज कोरा स्टीम राइस जीरा राइस फ्राइड राइस
भैया और कोई ऑप्शन?
लाइफ में और कहीं ऑप्शंस मिले ना मिले, मोतीलाल ओसवाल आपको देता है ऑप्शंस ट्रेडिंग में ऑप्शंस। इंट्रोड्यूसिंग मोतीलाल ओसवाल ऑप्शन स्टोर विद अ वाइड रेंज ऑफ ऑप्शंस इन ऑप्शंस ट्रेडिंग। एक्सप्लोर करो ऑप्शन स्टोर ऑन एमओ इन्वेस्टर एंड एमओ ट्रेडर ऐप। डाउनलोड नाउ। इन्वेस्टमेंट इन सिक्योरिटीज मार्केट इज सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल द रिलेटेड डॉक्यूमेंट्स केयरफुली बिफोर इन्वेस्टिंग।
Welcome back to Halftime Report. It's still going great for the market actually. It's been stable through the course of the morning, so there's not been too much in terms of a headline movement, but plenty of individual stocks are doing quite well. Eicher Motors, by the way, has hit a fresh high today, fresh 52-week high, and that stock is now up 33% in 2022 already. It's had a fabulous run. A couple of stocks that are seeing double-digit moves in the broader market, something like a Time Technoplast, it's up almost 12%. You have Lumax Autotech that is doing well, Karur Vysya Bank, Uflex. So these are a couple of volume and price buzzers. And India Mart, as you can see on the ticker as well. But Lupin is in focus as the company is yet to receive an approval for its key inhaler drug Spiriva generic. There's another news piece that comes in as Lupin is an exclusive licensing agreement with Japan's Irom Group for denosumab. Ekta, we had a chance to speak to the management as well. They said that the Spiriva approval will come in Q4, so they're confident of that. But tell us, what else are you picking up?
Well, you know, the Spiriva approval is expected in Q4, but the big news on Spiriva is that they've received a complete response letter from the US FDA. So that means that they've received queries from the US FDA, and there could be a possible delay in terms of a possible launch for this particular drug. Now, why is this important is because it's one of the key triggers for Lupin. $700 million in terms of size. It is expected to probably add around $100 million if in case they do manage to launch it on time. And there is enough, there's not enough competition in the drug. So if you have around 3 odd players, the street is anticipating around $100 million also in terms of annual sales from this particular product. Separately, you know, the fact that there is a delay also means that there could be some kind of adjustment in their FY23 earnings as well as their FY24 earnings from this particular drug. What happens to their inhaler portfolio, what happens to their US sales, what happens to their margins, whether or not they improve is all contingent on these important approvals. We did speak to the management of Lupin, so let's listen in to what they had to say.
Even at the beginning of this year, we did talk about the fact that the most important event for this particular year would of course be Spiriva itself. We do have a CRL on that, and that is the reason why we didn't get an approval in August. But having said that, we believe we're still very, very confident that we'll be able to resolve it and potentially get an approval by the end of the fourth quarter. So fourth quarter launch is exactly where we think it would be. Confidence levels remain pretty high on this, so we are very confident that we'll be able to answer that. We need to, of course, go back to, and which you should be doing very shortly. This would, of course, not, from our perspective, not inhibit our ability to come out, with the product by the end of this, fiscal.
Okay, so that's the management of Lupin talking about Spiriva generic. Bino Pathirampil, who is the Director Research Incred Capital, joins in to discuss this now. Bino, hi, thanks very much for taking the time out. Well, you've looked at Lupin for a long, long time. How important is Spiriva generic for them and the possible delay that they might be seeing now?
Hi. So Spiriva was one of the products which everybody in the market was looking quite forward to from Lupin's portfolio, especially given that of late the company's margins have been a bit below what market has been expecting. Everybody was hoping that Spiriva would come soon and the company would get back to a comfortable profitability level. So now the CRL is pushing that a bit back by probably 6 months. So hopefully it should come back, come again in FY24, and hopefully the company will get back to a reasonable level of profitability.
Okay. So if this this launch doesn't take place in Q4, the management was very confident that it would come through. But if it doesn't, then what are you penciling in terms of growth, particularly for the this portfolio and overall for the business?
So this particular drug, generic Spiriva, is probably around 20% of the EPS estimates for FY24 for the company. So if that doesn't come through, there is a risk of 20% downside to the profit estimates. But even if you remove that, still there should be a pretty good growth in earnings numbers that we are projecting for next year, because last year and this year are pretty low margin years for Lupin. And the market is expecting that the margins, even in the absence of Spiriva, should rebound back to historic levels of 15-16%. So even in the absence of Spiriva, what the market is pricing in is a pretty substantial 40-50% jump in Lupin's profits in FY24 over FY23.
Okay. The reason I ask is because the stock has had a big fall, right? I mean, it's down, almost 35% from the 52-week high of almost 1,000 rupees. You think there's any trigger that can lead to the stock seeing a recovery from here?
So the stock has fallen because of the lower profitability than what the market was expecting at that point in time. Even as late as Q1 of FY23, the company's reported margins at the EBITDA level was at a single-digit level. Everybody is expecting, and the management has also guided to a significant margin recovery by end of this year and in FY24. So as the company starts reporting double-digit EBITDA margins and margins that are in the high teens, which is what the company's peers are mostly doing, I see the stock rebounding back to those levels.
Okay. In terms of your preference within the entire pharmaceutical space, Bino, what would it be? Would you probably look at companies which are not so event-linked, say within the US generic pharma space, and which ones would they be?
So in general, I'm pretty positive on the US market as we stand today, because we have gone through an era of very high price erosion, which is mostly behind us in my view. The pricing scenario in the US should start improving next quarter onwards. So to that extent, I would look at companies gaining from the US market. Within the US market, it's very difficult to separate out events. US market or the US business by nature is very event driven. So that kind of volatility has to be built into expectations. Within that, at the current stock levels, I would prefer buying Zydus Life Science and Sun Pharma. Those are my topics.
Oh, sorry, which one did you say? Sun Pharma and?
Zydus Life Science.
Zydus. Okay, okay. All right. But just coming back to Lupin itself, you did mention about the, the way forward in terms of the stock price. But I wanted to also ask you about the other issues that Lupin has had, right? I mean, they were talking about how there is this price erosion issue in the US, which still continues. So they're not very confident about a recovery over there. Do you think these are some things that could keep a lid on the stock in the near term, despite that 11-12% gain that we've seen in the last 3 months?
So, like I said, overall at a macro level, I expect the pricing scenario in the US generics market to improve substantially over the next 6 to 9 months. And there is no reason why Lupin in particular shouldn't benefit from that. In addition to that, the management has highlighted a lot of cost control measures they are doing to make a step jump in profitability. So all this should result in margins getting back to the historic levels of mid to high teens is what I expect and what is built into the stock price as well.
Binu, yesterday we did discuss, the strengths that MNC pharma companies have in India with regards to the brands, etc. But at the same time, they're not available for cheap valuations. What are your thoughts on the MNC pharma space in particular in India?
It is very difficult to take a call on that space altogether because the MNC pharma, the performance of the company, performance of the stock depends on key products, key patented products that those companies have. So there are select companies which have products coming into the Indian market from the patent portfolio. They set to see growth for a few years, but then as those products mature, their growth may come off. So at a basket level, it's probably very difficult to take a call. One need to go individually into each company, and within that, individually need to analyze the product performance.
So what would your...
in general, in general, the new product patent regime that India has is favorable for the MNC companies.
So what would your top picks in that space be? Since you're talking individual companies, etc.
Sorry, since I don't cover any stocks from that area, I won't be able to make that comment.
Okay, Binu, just a quick last question, and just coming back to Lupin, I wanted to understand where Lupin stands in terms of a preference amongst the basket of stocks that you track.
So Lupin is probably in the middle level. I have a hold rating on Lupin. I believe that once the company starts delivering on profitability, as the EBITDA margins start inching up, I will look forward to a better upside on the stock price.
Okay, we leave it at that. Bino, thanks a lot for joining us and giving us an update on the entire pharmaceutical space. Let's slip into a quick break. The market is still inching higher. Nifty still up a century. Let's get Jay Thakkar of Marwadi Share Broking on the other side of the break to give in some trading strategies. Do stay tuned in.
Well, the market's looking extremely good now, 17,000, 1,700 back on the Nifty. We have a bunch of mid-caps surging as we speak. Oberoi Realty is one which has moved to the high point of trade. All through today's trading session, we've seen good gains come into L&T Finance Holdings and BHEL. But joining that list now are Aditya Birla Capital as well as India Mart, both of them at the high point of trade. So it's really a day where the index is doing well, but the mid-cap index is actually outshining that. Does that continue as we move towards the expiry hour as well? Jay Thakkar joins in to give us his view on the index as well as individual stocks. Jay.
Hi, very good afternoon to you, Mangalam and everyone. Well, I would say that in today's expiry, monthly expiry rather, I would say that Nifty has taken a good support in the region of 17,600, 650. I mean, that's very important, critical as well, because if you see, Mangalam, then in yesterday's trading session too, we saw Nifty manage to close above the levels of 17,600 and Bank Nifty above the levels of 39,000. I mean, these were crucial resistance levels on the upside as far as this monthly expiry was concerned, and closing above those clearly opens the gates for 17,750 on the initial basis, and that would be my intraday target, and it's trading at around 17,700 right now. And if it managed to close above 17,750, maybe now or maybe in the later part of the day during the expiry, then I would say that it is likely to reach towards 17,850 as well. So overall view is bullish as far as short-term trading is concerned, and one can place a stop loss below the levels of 17,600 and initiate long positions on the index, because I believe that from here on we can see some good levels on the upside. As far as stocks are concerned, Mangalam, I would say that I have two buy recommendations right now. The first buy recommendation is on United Spirits. I mean, in this stock we have seen a good reversal coming in today's trading session with a very good increase in its volumes. So I have a buy recommendation on its next series futures. One can buy United Spirits futures, September futures at 828. That's the current market price, placing a stop loss at the levels of 802, and one can target 870 as far as September series is concerned. So this stock is likely to reach towards the levels of 870. There is no resistance as far as United Spirits is concerned, at least in the short term. The second buy recommendation is on Canara Bank. I mean, banking names are doing good, and among the PSUs, I like SBI, but then the second stock which is doing quite well is Canara Bank. This stock is likely to reach towards the levels of 253. So one can buy September futures for a target of 253 on the upside, and one can place a stop loss around the levels of 236.
Okay, all right, Jay, we're going to leave it on that note. Thanks very much for joining in and speaking to us, giving us all of those technical picks. Let's get in some market opinion then. We caught up with Sridhar Sivaram of Enam Holdings earlier today to discuss his take on inflation as well as the banking sector. Listen in.
Our broad view is that the construct for India is looking great. I mean, inflation, we think for the month itself will come around 6 and it is trending lower. GDP growth looks like it's trending upwards. Consumption is looking as if it's coming back. But when we look at the global construct, it just doesn't look that great. I mean, it will be very difficult for India to move in isolation. So if there is issues globally, we will face the brunt. So I would say that this is more a buy and dips market. You have to be very careful when there is irrational exuberance. Broadly, the value guys are on top, and growth is suffering. But our view in the last 2-3 months is that it's time to slowly get into growth. And the first of the block, at least that's our view, is the financials, which is the banks. See, the private sector banks have really come out very well. The credit costs have actually normalized much faster than anybody would have anticipated. We think that the next 5 years is going to be great for large banks. Any bank which can access liabilities, that's going to be the crux. That if you are able to access CASA and your deposit cost is reasonable, then I think those banks will do well.
Okay, he's going very big on banks. They're extremely bullish across the board, private and public. Let's do one thing. Let's take a quick commercial break. On the other side of the break, we'll connect with P.S. Patel, who is the Chairman and Managing Director of PSP Projects. They've won some new orders, so more on that in a bit.
Watch out for the broader markets. The mid-cap index is up around 0.7%. We have Anand Raj. That stock has done absolutely spectacularly on a week-to-date basis. Let's see whether this run continues. But it's almost up around 30-odd% on a week-to-date basis and is up around 13-odd% today. RBL Bank is the other one giving it company in terms of week-to-date returns, almost 30-odd% for RBL Bank, which we've been covering since yesterday. Stock up 6% at this point in time as well. PSP Projects is buzzing after winning new orders worth around 247 crores, with the company's total order inflow for FY23, which has now crossed 1,340 crores. Mr. Patel, who is the CMD and CEO of the company, now joins in on the show. Mr. Patel, thanks very much for joining in. This 247 crore order which you've won, can you just tell us from which segment and when does money start coming in for you?
The 247 crore order which we declared yesterday is more one is the museum from government of Gujarat, which is at Vadnagar, and 143 crore is an order which is the first largest order for our Vikas plant, which has come from L&T. The elements which we are going to supply is the ducts which will be utilized in bullet train.
So both these orders are from Gujarat, is it?
Yeah, both the orders are from Gujarat.
But doesn't that, further increase the concentration risk? Because as we see, most of your orders come either from Gujarat, Uttar Pradesh or Maharashtra. In fact, as we speak, more than 2/3 of your order book is Gujarat itself. Is there a conscious strategy? And at the same time, is there a risk? What are the receivables that you have?
No, as such, as we are based at Gujarat and we have been working in Gujarat since last 15 years, there is no risk of adding more and more order from Gujarat. Actually, it is more comfortable and better for us. At the same time, we are concentrating on the states where we have comfort. So what we are working in Uttar Pradesh, mostly the project which we have come, the most challenging project of Kashi Vishwanath we completed. So then after we entered into UP for further 6 to 7 projects. And Maharashtra also, there are 2 projects only, and previously also we worked for some projects in Karnataka. So as such, being a Gujarati company and based at Gujarat, we are getting sufficient inflow of order from Gujarat, so that is preferable for us. At the same time, we are inclined to all those projects which we are getting out of state also.
Okay, so what will all of this mean for your overall order book? You have an target of 2,200 crore order inflow for FY23. Till date, it's about 1,344 crores. You think you'll be able to meet this 2,200 crore order book?
Yeah, we should be in a better position by end of March because 1344 at this stage, and still we are bidding for some of the large projects in and out of Gujarat. So probably it would be very easy for us to reach to 2,200 or maximum we can go up to 2,500 crore, which we have projected for this year.
There's been a general rise in receivables when it comes to government's payment schedules during COVID-19. And I think your receivables also rose to over 300 crores on a standalone basis. Where does it stand now, and has the situation improved?
Yeah, after COVID, the situation is much better than the previous. So presently, we are not having that receivables to the level of 300 crore. It ranges between 1.5 times the revenue of a one month, which is in the range of 200 to 250.
All right. And, you know, one more thing I just wanted to ask about your comfort with Gujarat, etc. The other orders that you win are from UP, there's some from Maharashtra. Back in the day, you got some from Karnataka as well. Is there any political affinity, or is there a political risk to that business as well? Say, for instance, if there is a change in the government of either of these states, will you stand to lose some of these orders? Is there something that the street should be worried about?
See, as a construction company, we should not be worried about the political situation in that. But before getting into any of the territory, yes, we have to think about that territory, whether the government is stable or not. Otherwise, any good stable government and working as a civil contractor, before going to that state itself, we diagnose that with what level of comfort we need and what social support we need from that area. So probably political change should not impact to a contractor. Rather than we should always think about whether the government is stable and the environment for which we are going, whether the social connect is good, then we should go for those type of projects out of Gujarat.
Okay, yeah, I guess the political situation, no one can really control it, right? It's beyond your control. You'd rather focus on controlling your own business. But in that sense, you know, your debt has been at about 100 crores in FY22, and that's risen quite a bit in the past 4 years. Any plans to bring it down?
The debt level which you are saying is, I think, only 50 crore is the long term. So other is 67 crore, which is mostly the FDOD, which we are taking from the banks.
Okay. All right, Mr. Patel, we're going to leave it on that note. Thanks very much for joining in and speaking to us. So that's PSP Projects. In fact, the stock is up around 3.5% at this point in time. We need to take a short break, but as we do that, a quick reminder for our viewers, it's that time of the year again. Money Control Pro's Financial Freedom offer is back with added benefits. Get a Money Control Pro subscription at net zero cost by claiming exciting offers worth around 1,500 rupees from our partner brands. Grab the benefits now only on the Money Control app or website.
Mover for the last 2 days is RBL Bank. The stock is in fact up over 20% in just 1 week. Nimesh is here to tell us what's happening with that one. Nimesh.
Yesterday, everybody was surprised with the kind of move we saw. Intraday, the stock was up 20-odd%. Even today, the stock is up 7-odd%. Now, yesterday, post-market, there was a disclosure of on the block deal data that suggested that the college retirement fund did buy 45 lakh shares at an average price of 108, which works out to close to 50 crores of worth of RBL stake that they've bought in yesterday via block deal. Now, I was just looking at this particular fund. It's a large fund globally. It's one of the big funds of the US. And globally, they manage, in terms of asset under management, they manage over $1 trillion. So it's a large fund. And maybe that's why, the stock is reacted positively. Remember, today is the expiry, but the stock is in F&O band. So, bit of covering. Maybe, for the last couple of days, apart from this buying interest, there could be some bit of short covering as well. what has done is this particular deal and the interest of a large fund buying into RBL Bank has led to a bit of a rub-off in the other private bank names, small private bank names as well. So for the last couple of days, most of the stocks are buzzing. But for RBL, there was a disclosure last evening that college retirement fund did buy 45 lakh shares, investing close to 50 crores in RBL Bank.
Okay, but still far away from its 52-week high of around 221.2 rupees for RBL Bank. Thanks, Nimesh, for that. But talking about 52-week highs, Sonia, our unusual mover segment, you're tracking a stock at a 52-week high.
Yes, the stock I'm tracking is Asahi India. Now, it's well covered and well tracked, but I just wanted to bring it up because it's had a very good run. Today, it's hit a fresh 52-week high. The stock is up about 33% in 2022 already, and its market cap has now reached 15,400 crores, and hence it features on our unusual mover segment. It's a big beneficiary of the rising auto demand and the new launches that have come through, and here's why. Asahi India manufactures glass and window panes for auto companies, for the construction segment, for buildings, for consumers. So it has a wide variety of clients, but 74% market share is what it enjoys in the Indian passenger car industry. So that's a large chunk of the business. And it supplies to most large OEMs, whether it's Mahindra, Maruti, Tata Motors, Toyota, Ashok Leyland. And recently, the new launches, whether it's the Kia Carens, the Volkswagen Taycan, the Skoda Kushaq, all the windows and all the glass, it comes from Asahi India. So that's where you can understand that they get a lot more revenues because of a slew of new launches that have come through. They manufacture glass and windows for 4 industries: autos, building and construction, consumer and industrial. So they have a very strong presence also in the architectural glass that is used in buildings. They are the second largest manufacturer of float glass in India, and they have a 17% domestic market share in architectural glass. So these are the 2 segments which are doing very well for them. Now, the other big trigger is that their earnings were very good in the quarter gone by. It was a 53% revenue growth that we saw and a 200% profit growth at about 106 odd crores. So just wanted to profile this stock because, it's a proxy for the strong demand. We keep looking at autos and auto ancillaries, or auto component manufacturers, but these are also some stocks that are big beneficiaries of the rising demand.
Absolutely, and this one I presume would also be, engine agnostic. So whether it's an EV or whether it's an IC engine, you would require the glass which will come from Asahi India.
And even segment agnostic, it supplies to a lot of the 2-wheelers and the 4-wheelers. So, it has across the board clients.
All right, so that's about Asahi India. A big mover hits a fresh 52-week high in today's trading session. But fertilizer stocks also in focus as the Ministry of Fertilizer has issued packaging rules for fertilizer companies. 2/3 of the fertilizer companies' bag will now have logos of the government's fertilizer scheme, and the remainder 1/3 will be used for the fertilizer company's name and logo. Sonal joins in with more details on what impact this could have on the stock. Sonal.
Thanks a lot for that. Well, yes, the government has come out with new rules as far as packaging for fertilizer company bags are concerned. They say that they will implement one nation, one fertilizer rule by introducing single brand for all the fertilizers, be it private sector or public companies like RCF, NFL, etc. Single brand name for some products like urea will be Bharat Urea, for NPK will be Bharat NPK, DAP will be Bharat DAP, and so on for other products as well. Now, after this, what happens is 2/3 of the fertilizer companies' bags, they will have the fertilizer subsidy scheme, which is run by the government, and also the unified brand that the government has announced. And 1/3 of the bag will have the company which is producing that particular fertilizer's logo and other details as the ones that are required by regulations as well. So fertilizer companies, according to the government, should not procure old bags with effect from 15 September, that is the next month, and new bags under the new scheme will be introduced with effect from 2nd October 2022. And they have by the end of this year, that is 31st December, to completely fade away the older bags from the market. Now, it came across as a sentiment negative for, say, private companies whose brand visibility could be impacted by this particular change in packaging rules. However, this is just a sentiment negative. Overall, on the longer term, they have good brand visibility, they have better distribution and higher market share in distinguished territories or markets as well. So it is not such a big negative that has come across. But yes, there is a big change as far as packaging is concerned in this particular sector.
The markets now, a couple of stocks. Ester Industries is now up 15%. So we do have a lot of stocks from the cash markets also surging as we speak. Time Technoplast is the other one, running with huge volumes, up around 12 odd percent. And Kolte Patil has actually, moved into the 20% upper circuit band And this makes the stock just about 7% away from its 52-week high. Today's volumes are 7 times the average that we're seeing on Kolte Patil itself. So it's not just the front line and the mid-cap frontliners. We do have a lot of beneath the surface movers as well. But a whole host of positive management commentaries that we got today in the real estate space, in particular, starting with DLF. The company has launched or has a pipeline of 35 million square feet over the next few years, with sales potential that comes up to almost 50,000 crore rupees. Earlier today, we spoke with Ashok Tyagi, and this is what he had to say.
Obviously, internally, we are trying to do better, but what we had guided the market also was that an annual bookings target of about 8,000 crores, which is 2,000 crores a quarter. So Q1, we definitely came in on. The vacancy levels moved up from 5% to about 15%. But the 85% people who were occupying, there was no rental disruption there at all throughout even the worst days of the pandemic. The vacancy levels have begun reversing now. So I think from 15% vacancy level, we are now talking about 12% currently, and hoping to come back to that single-digit number by the end of the year. We expect a lot of interest from a lot of existing and potential players. So let's see. I mean, we'll obviously not be interested in doing something silly on the. It's not going to be an ego buy for us for sure. Just go to Ashoka Hotel. Before the next launch, we'll see the absorption pace of the current price points, and if we believe that there's a small proportion to hike it further, we'll definitely want to continue on that exercise.
Okay, well, let's move on then. NHPC is in focus as they have signed an MOU with the Rajasthan government for development of renewable energy parks in the state. The company has also signed an MOU with BEL to set up a large capacity solar equipment manufacturing facility. We spoke to AK Singh, the chairman and managing director at NHPC, to discuss these developments. Listen in.
Actually, Rajasthan, the discussion is going on last almost 6-8 months. And we have also acquired some land over there through the lease basis. We have already floated a tender for 600 megawatt, and it is under discussion with the state of Rajasthan for signing of the PPA. If it happens, then we'll award 600 megawatt, which already been tendered. Really, on our balance sheet, we can raise at least 10,000 crore. But we do the capex. At the present, we plan for 8,000 crore. And one by one, our projects are coming. So going up to even 15,000 crore in a year for the capex, it doesn't any problem. And our balance sheet raise the loan, and we put the 30% equity. The capex is not at all issue for NHPC. The 7 is now the lowest in the history of NHPC. Now we have only 737 crore for the current bill only.
Okay, well, Route Mobile is another stock that's buzzing in trade today. Earlier this morning, we had a chance to speak with Rajdeep Kumar Gupta, who is the managing director and group CEO and the promoter at Route Mobile. He expects the company to achieve a 50% revenue growth. He expects better gross margins as well, and he has a good cash on the books for some inorganic acquisitions too. Listen in to what he had to say.
The large volume coming from Africa, it might create a little bit issue of price decrease on price per transaction. But I think we are well on track as compared to what we achieved in last quarter, and whatever the guidance we have given to the market that we will overachieve 50% target. We have our internal aspiration to grow our GP somewhere between 25 to 30% in coming quarters. And we are looking forward for that, and we are working towards that. So I think we are still guiding between 11.5 to 12.5% as of now. And between next few years, probably we are aiming to grow that to 14 to 15%. But as of now, if you talk about the guidance, anything between 11.5 to 12.5% is something that we are targeting right now. We are evaluating a few companies in this space. Along with that, I think we believe that in coming days, the authentication is going to be seamless, and OTP can be replaced by mobile identity. So there are different use cases which is arising now where people are looking out for a seamless authentication. So we are evaluating a company in mobile identity space, and very soon we would love to announce that acquisition. Our complete aim for next 18 months is to integrate all the acquisition which we have done. And I think we are fairly integrated the finance part of all the company we acquired.
All right, well, shifting focus now to updates from the United Kingdom. The race to succeed Boris Johnson as the British PM is nearing the finish line. Candidates Rishi Sunak and Liz Truss have faced off at the Birmingham hustings to woo Tory party voters, and reports suggest that the 47-year-old Truss is the frontrunner to succeed Johnson. Sanjay Suri is reporting on the same.
In their penultimate stretch now, the Conservative Party hustings moved to the National Exhibition Centre in Birmingham. Many party members have been following the other hustings and debates online, but enthusiasm to see the candidates and to hear them personally and directly clearly remained undiminished. Many queued up, and it was in the end an almost full house. As always, Conservative Party opponents turned up to have their say. Loyalties are clearly divided. The posters said it, the t-shirts said it, the people said it.
I think this is going to do the good on leadership, and he's a very experienced.
I've seen through what he done during the pandemic, and the fellow he gave, and the grant, and the way he controlled the pandemic. I'm happy with that.
Well, it's important to unlock the country's potential, and I think only Liz Truss will be able to do that by, reducing taxes and encouraging growth in the economy.
We support Liz. The reason behind, we're looking the next general election to win under Conservative leadership. So she will ability of bring the party united and go forward for next general election.
A lot of the party members appear to have taken their decision and cast their votes. They're here to show their support for one or the other. There are others who say they are still waiting to be persuaded, but in any case, this whole campaigning, this whole business of trying to win voters over is now drawing to a close.
I think that I'm probably leaning towards Liz, but I want to hear both of what they have to say in detail before I cast my vote.
We're in a state of vacuum at the moment, so we're here to get inspired by one or both.
We had a show of hands at the hustings here in Birmingham, which suggests that most people appear to have voted already. That does raise the question what the remaining hustings are about, whether these are a discussion forum or a platform for campaigning. Clearly also we see that Liz Truss is hugely ahead in the polls, and she is looking very confident. That will mean that Rishi Sunak has a lot of catching up to do very quickly. It is now looking very difficult for him.
Okay, well, let's get back home because the market is picking up some more pace now. And the one sector that's doing really well at the moment is capital goods. Just take a look at BHEL. It's up almost 10%. Big volumes playing out on BHEL right now. You had ABB, of course, and Siemens that have been doing very well. ABB has been sitting at a fresh high. And a lot of the smaller capital goods names are also picking up quite a bit of pace. Also, you have pharmaceutical names like Dr. Lal PathLabs, Natco Pharma that are doing pretty well this afternoon. And then there is news-based stories like Uno Minda that have received an approval for manufacturing. So they have about 3% higher on Uno Minda. That one as well is looking pretty good. So all in all, a good market that we have on our hand. 360 points higher on the Sensex now. Looks like it's going to be a pretty good afternoon of trade.
Yeah.
All right, it will be a good afternoon on trade. We're at the high point, and it is also the expiry session. So let's see where we go for the second half.
Not to mention, we have the Fed minutes tomorrow, so maybe the street is a bit more optimistic. Not minutes, the speech.
We have the Jackson Hole Symposium. We do have, the jobless claims data today.
Absolutely. There's some consumer spending data as well. Okay.
Well, on that note, what we'll do is we will wrap up and we will leave you with all the action with Business Lunch.